over 300,000% if you had purchased NVIDIA back pre-2000 and are holding it right now. You would be up over 300,000%. And in today's video, I want to talk about this generational buying opportunity. I want to talk more about the psychology behind investing in individual stocks. And I want to compare this to other stocks. And let's talk about what have we seen with some of the biggest movers of all time, at least since the 90s. Let's go back to the 90s in large cap stocks and how they all stack up. All right, let's get into it. What I do want to start off with first is, okay, yes, 300%, 300,000%. Keep that number in the back of your head because we're going to have other examples to talk about. But what I do want to start off with is very simple. Coming off the lows of the 2022 bear market, we saw a very nice move up in NVIDIA. But it was very interesting to me, and I remember distinctly before an earnings release, which I'm going to go in and pull up exactly when. It was this one right here. It was about a year ago, back in May of 2023. This period right in here. We had already seen some very nice movement off of the lows. NVIDIA was down near $100 and it was now up well over $250. And it's like, okay, well, this thing has made a massive move in literally 6 months. You know, let's talk about what that move was. The move was to the order of 175%. It has to be overvalued. And the sentiment on social media, which I'll admit, I am not very plugged into anymore. I am not very plugged into financial Twitter, X, social media, CNBC, whatever. I don't bother with that shit. I don't give a crap. I don't care. It's irrelevant to me. And if you've been on a recent live stream, which we do live stream every single day, usually Monday, Wednesday, Friday for Power Hour, and then Tuesday, Thursday for like the first hour or so of the market, you'll understand, or you know, my stance on like my investing approach and my strategy and kind of how I tend to operate on that front. No individual stocks, just ETFs, but with some psychology blended in and some option selling blended in as well. I think that could do very, very well for you. But why was it that back here, I remember distinctly on social media, so many motherfuckers getting burnt because they were shorting into earnings. They were shorting the stock. They said there's no way it's going to go higher. And back then, there was seemingly a much bigger wall of worry, as some will say, a much bigger or a much larger bearish sentiment, short interest surrounding the stock. Yet now, okay, the stock is up another 275% from that point 1 year later, continuing on an impressive pace. Now, it seems like this is the sentiment that I'm seeing from the few things that I see, articles, talk of the town. Why is it now that it's a generational hold? This is an incredible opportunity. AI is just beginning. Why is it now that that's being said? This gets into the psychology. I legitimately, now this is after a lot of work for myself and losing a fuck ton of money. Okay, at least for me. It's all relative. Okay, when I say a fuck ton of money, as someone who initiated themselves into $200,000 of college debt right out of school, you know, it's all relative. I could have taken a large chunk of that and gotten rid of it, but I decided to keep going, and I lost a large chunk of that. So in my experience, you know, after losing a lot of money, making some money, losing some money, and now seeing a lot more consistency, albeit fairly small size, if you have been following the trade recaps over the past year. But you start somewhere and you build the confidence and then you scale from there. It doesn't make any sense, dude. It doesn't make any sense. Like, this is like the literal inverse to psychology. Okay, we'll get back to that in a second. Let's get into it. Let's talk about the comparisons, because I didn't really give a shit until I saw these comparisons and I was like, holy crap, we got to actually pull this up, because it's nuts to me. So we just talked about 300,000%. Let's pull up our trusty friends over at Apple, right? One of the stocks that you can go back and say, generational hold, generational buying opportunity. If you were lucky to have bought Apple in the, let's just say, the early 2000s, you have fucking crushed it. Straight up, you crushed. You held through 08, 09. Guess what? It didn't matter, because we're way higher now. Let's talk about it. If you go back to the inception of Apple, at least that I see, back in 81, I don't know. If you go to the Apple, let's go to the Apple low. If you were to buy in June of 82, okay, to right now, you are up 360,000%. Kind of similar, right? Kind of, if you go back to, just a couple of weeks ago, you'd be up around 315%. It's pretty darn close. When we're nitpicking the absolute bottom here as well. Similar return to NVIDIA, right? Similar. You go and look at a stock like Microsoft. Now, Microsoft began trading, I believe, back in 86 or so. At least that's what I'm seeing. The data that I have to go back to. I go from there to here, 460,000%. Microsoft before the tech bubble, 64,000%. And then Microsoft did not get back to all-time highs for 16 and a half years. Okay. Cisco. One of the best examples of the craziness from essentially the tech bubble. This stock went on an absolute tear, and pretty much from low to high did about 100,000%. 100,000%. What it then did was it fell about 90% from low or from high to low, and has yet to return to all-time highs about 24 years later. Now, I'm not saying that these companies are bad companies. They're clearly still around, and they're clearly still doing very, very well. And had you bought somewhere along this line, you're obviously looking great. But when you look at the NVIDIA move, it's getting up there with some of the largest moves of all time. Literally all time. And if you can nitpick into timing it, like the move that it's seen recently is pretty freaking crazy. But I think a lot of people don't recall that this stock has been around pre-tech bubble, through that crash, through 08, 09, and still is here. It's not like we're looking at something that just hit the market 10 years ago. It's been around for a while. Companies existed for a while. And so the whole premise of the generational hold, if NVIDIA continues to go higher, which if the market keeps going higher, why not? Like, it can. You will be talking about from, let's just do the math. If NVIDIA goes to, let's just say, $2,000, a little bit less than a double from here, okay? Which would not be that crazy, because we've seen it do insane, more than that in less than a year, right? If that occurs, you are looking at a stock that has now, or that would be looking at 500,000%. 500,000%. What was Microsoft again? What was Microsoft at from essentially low to high? 480,000%. Because of the nature of, right, the compound effect. you don't have to go like each, $100 from here, dating back to the origination of the stock trading in NASDAQ, I believe, like hidden the markets. Like you literally are looking at like the all-time greatest, like one of the all-time greatest. Now, the problem that I think a lot of people have, or that people are getting themselves into, is that they're finding themselves saying, as of late, realistically, like here, they're finding themselves saying generational hold, I'm never going to sell it, all these things. This is not a video that is saying sell. Because if I say that, I'm unwinding the 5 to 6 years of watching this stuff, soaking it all in, and the research that I've done over the past 5 or 6 years, because it's interested me. What I've come to now is there's absolutely no point. There's no point in trying to be right. There's no point in stroking your ego. I mean, you're better off stroking something else. Like, I'm not even kidding. Because you will eventually get fucked. You will get it handed to you on a silver platter right in your face and be forced to eat it. That is how this world works. Unless you are Nancy Pelosi and you know what I mean? Unless you have control, you can't play that game unless you've got influence and you have money to influence, and we're talking massive mega money. We're not talking about, I got $1 million saved up. No, dude, you don't have shit in the grand scheme of the world. There is no point in stroking an ego. There's no point in trying to say that you're right. I am right less than I am wrong in my trading. Over 1,000 trades that I have tracked in the past, like, almost 2 years. And journaled now. There's many more trades prior to that, but that I've tracked, 1,000 trades. I'm right less than half the time, motherfuckers, but I've been profitable. You don't need to be right. It's irrelevant. How many times will you be wrong on the next generational hold for the one NVIDIA that you pick? There's not a lot, right? There's so many stocks you can trade and buy. Yet we just looked at a couple, and those were some of the biggest stocks, like, of all time. I will stand on a fucking hill and die on that hill saying that this looks to me like one of the most blatant and will be a beautiful example of trading psychology in history. I don't know when, at some point. It just looks, all of the things that we have seen through past bear and bull and blow off tops and bubble this, bubble that, culminate to a chart that looks very similar to this. That is all I'm going to say. And does that mean sell everything? No. But what it means is don't act like you're fucking smart. We're all dumbasses at the end of the day. You don't have to be very smart to make money. It's irrelevant. And do as you see fit. For example, if, let's say, I had thrown $10,000 at NVIDIA, and that $10,000 turned into $100,000, turned into $200,000, and I have not sold a single share. All I would say, everyone has different risk management. In my opinion, I'd say to myself, holy shit, it could keep going. And if it is a Microsoft, right? If it is, there's no guarantee. NVIDIA could get fucked, and there could be 2 other companies that take them right out in 10 years. We have no idea. Don't say that you know. You don't know. CNBC guy doesn't know. Nobody knows. It doesn't matter. Let's say that it's a Microsoft, and we're right here. I don't know. Or we're here. You might sit on this thing flat for 2 decades or a decade and a half. Maybe that's okay. Maybe it's not. But had you had Microsoft and trimmed something, a little bit here, a little bit there, taken that money and rolled it into the S&P or the NASDAQ, that money would have served you pretty good. And the point I'm trying to make is that if it was me, and my 10K turned into 100K or 200K, let's say it turned into 100K. I'd have no problem taking 50K, taking 60K off the table, tossing that into the S&P, selling covered calls, getting my average market return on that money, or putting it in a high interest savings account and earning 5% as of right now, earning 5% per year, doing nothing, doing jack shit, and then having a piece of pie, having skin in the game. I just think that people have it backwards. That when shit goes up so much, it's not, I should trim some out so that I can realize some good gains. Yeah, you got to pay taxes. I understand that. But put that money to work somewhere else at a lower risk, because you have substantially higher risk. Like your risk when Cisco was doing what it was doing, your risk when we have not had a substantial pullback in the overall market, we're talking like big bear market. I mean, you got to go back to 08, 09. COVID, sure. 2022, sure. Tiny. I didn't trade through 09. I don't know how old I was. 10? I don't know. But you can go back and look at it and see how long it took and say COVID and 2022 bear markets were jack shit. They were nothing compared to what has happened in the past. It will happen again at some point. I don't know when. I'm not going to predict when. I don't give a shit when. Doesn't matter. But when it happens again, you want to be the guy with cash, not the guy that had all his money tied up in one stock that he made very, very good. His net worth on paper, unrealized, did so well. Then he lost 90%. He's back to square one. Maybe he's up a little bit from where he was originally starting at, or he's still up, but he was here, and now he's back here. That sucks. And now you don't have any cash, too. You're all tied up. You don't have any cash to buy more or to buy other things that are cheap or the next generational buying opportunity. You know? For example, like if in Microsoft's case, if you're smart, and even if you just never sold anything, but you had accumulated a lot of shares and you sold covered calls for the next freaking decade and a half, you be building up a pile of freaking cash. At a minimum, that's what you got to be doing, I think. It minimizes some of your downside, and nothing better than taking money off the table, but people have it all wrong. I mean, I just don't understand. I don't understand why I'm seeing, like, I saw articles and shit cross my mind, and I even seen people I've talked to, and it's a perfect example. When you start talking to people, friends, family, whatever, and they start talking about NVIDIA and AI, dude. And you look back at the charts and they're up this much. Oh, man. I don't know. But it just seems like it screams to me blatant example of investor psychology. And this is not the time to be buying in, and it's the opposite. It's a time to be de-risking, de-leveraging, locking in something, and setting aside, I believe, some cash for a rainy day that will inevitably come. It will come at some point. Who knows when? But it will inevitably come. That's my 2 cents. I don't know. Let me know your thoughts in the comments. If it's not a sell everything, dude. It could go to 3K, and they're got the split coming up. So I guess technically, it'll be $100 stock in a couple of weeks. But when it's after the split and it's $100 stock, it could go to $600. It can go back to $1,000 if we're still in a bull. We enter a bear, look out, because this is one of the biggest inflated stocks. Maybe for good reason. I don't know. I'm not a fundamental guy. Just look over history, though, and there's not too many examples. There's really just not too many examples of this throughout history, and it's the same shit. Internet, this, that, it's AI, same shit. It's the same thing. Back in 2000, the .com, oh my God, oh my God, it's brand new. Oh my God, AI is brand new. It's the same thing. It's the same concept. But in a small bull bear market where the S&P was down 25%, NVIDIA drops 69%. Just think about what it could do if we had a prolonged bear market. which is coming at some point because we haven't had one in a while on the S&P. That's all I'm trying to say. Whether you care or not, whether you're invested in it or not, I think it's a very, from a psychology perspective, it's a very interesting situation. Because again, what I'm talking about is this: the lost decade. Okay. Oh, we got an alert. I'll check that out in a second. But like, go back to like 2000. Dude, you didn't even get to new all-time highs until like 2013. You technically did it here, but then you went down to even lower lows. Like, what if that happens in the S&P? Like, what type of carnage could you see in some of these drawdown phases in individual stocks? Could be huge. And is it worth holding through that? And then are you going to be a dumbass during that period? And are you going to sell the bottom? Or are you going to sell, or could you sell when things are good? When you got the sun is shining, the rainbows are popping up, the leprechauns are putting the pots of gold down, go collect your pot. And in the grand scheme, to me, I think you got good opportunities to do so. Just people have the psychology all wrong from an investing perspective. So if you watch this long, dude, you're awesome. And I'll see you in the next one. Peace.